get to some of the big stories we've got so far this week, because the U.S. Federal Chairman, Jerome Powell, technically brought the business week to a close today, a few hours ago, when he indicated that the central bank is likely to start withdrawing some of its easy money policies before the end of the year, though he sees interest rate hike still in the distance. The much anticipated speech as part of the Fed's annual Jackson Hole Symposium, Powell said the economy has reached a point where it no longer needs as much policy support. That means the Fed will likely start cutting the amount of bonds it buys each month before the end of the year, so long as economic progress continues. Based on the statements from other Fed officials, the tapering announcement could come as soon as September's 21-22 meeting. That will be the second to the last Fed meeting for this year. Joining me to discuss this and other top global news for today is Uchenna Minnis, Global Market Strategist and Managing Partner at Minnis Asset Management. Thanks for coming through on the show in our studios this evening.
Thank you for having me, boss.
We appreciate it. What are your key takeaways from Jerome Powell's speech this afternoon?
Yeah, boss. Jerome Powell has perfected the art of sounding perfectly, should I say, politically neutral, macroeconomically neutral in this case. You know, he has said everything at the same time he has said nothing. He has highlighted the fact that inflationary pressure is in a place where it's quite significant and tapering needs to start getting implemented. However, he has also said that the tapering cannot be aggressive at the same time, you know, and it's still highlighting that the variable with robust macroeconomic data would also give them the signal to implement tapering. Where I think now with the Federal Reserve is that easy money is now getting to the point where it's addictive to the market. And to take it out is going to be problematic. So I think at this point, it's just a kick in the can method, really, Boston.
Should we get a bit, a little bit concerned about this tapering, by the way? It's going to be in dozens of billions of dollars. So how should the markets position for these withdrawal?
It's problematic, really, and that is what the market has really rode upon.
It's not going to be an easy way.
Yeah, it's not going to be an easy way. It has to leave that aggressive mark, really, and that's the dilemma they are in, and they don't want to kickstart any cascade bubble burst, really, and they really need to find a way to implement this tapering process.
The market had enjoyed the stimulus, didn't it? The market enjoyed it while it lasted.
Yes, and that's where the addition comes in. So how do you tell an addicted, should I say, market now that you want to take away that
easy money?
Yeah, that narcotics that have really driven it all through. So that's basically where we are, boss. That's really where we are.
For those of you who I'm going to ask a bit more about the trade in the various assets, but let's quickly touch through one of the big stories this week, because the U.S. SEC is touching the nerve on the Chinese about listed companies listed on American exchanges. Could this become a tit-for-tat issue anytime soon? Do you see Beijing reacting?
Yeah,
or retaliating?
Yeah, no, the truth of the matter is China-US has been in some Cold War. We saw trade war with during the Trump administration, but that Cold War is still significant. So we would get that sort of tit for tat, as you've put it. But it is clear what China is doing. China doesn't want to allow that level of freeness with its corporations as what you see in the U.S. And from the U.S. perspective, they are seeing it that could be some sort of should I say corporate espionage when the country is overseeing all of this corporation and sort of restricting, should I say, freeness in doing business.
But what the U.S. SEC wants is just for more disclosures. The Chinese are not likely to agree to more disclosure.
Yeah, they can. The truth of the matter is they run different systems. As much as we will try and say the world is globalized, they just run different systems. And that's going to be the case.
Politically, structurally speaking.
Yes.
And that goes into even the companies from China, by the way.
Yes, and that's what China is trying to prevent. They're trying to prevent that, should I say, Americanization of their corporations, really, and they want them to still have the very backbone of the Chinese system, and I think that's where the problem comes in.
Anyone has idea how long the virus pandemic will remain a fundamental risk for the global economy and the markets moving forward, my friend?
Also, if I have or anyone has that information, I'm pretty sure they will be somewhere in some island enjoying themselves. Nobody knows about that variable. They don't know the end. We don't know the end. And every single time we're getting to see how this virus is sort of evolving to try to mutate and stay relevant, and that is always going to be a case for the time being, Bosso.
But in terms of this particular virus, is it a major... has it become a fundamental risk element right now that we can't really do without?
Yes.
A risk factor.
Yes, that's our new normal, boss. Everybody, any analyst, any market investor would always take into account what the pandemic variable would cause into their outlook. And that's what we're seeing. We have to deal with what it is we're dealing with right now.
So how's the week, the market been? We saw a bit of a dollar come back this week, and then you see all the other assets try to. I saw yield on U.S. Treasury as well also moving on. What's the big talk? Is it folks concerned about the issue in Afghanistan, thousands and thousands of miles away? Why is this such a concern for Wall Street?
I think it just translates into that political landscape in the US. So when the approval rating of the president starts to drop, there is that indication that his policies might not really, he might not have the time to implement his policies, and then that can affect, should I say, asset prices and other related financial instruments. And I think that's where we are. And also there is that risk that they might see some sort of terrorist attack to the system in the US. So those are the variables that I think they will have to deal with now going forward.
Okay, we're going to have the final trading days next week, cut into half as we go into September. Give me your outlook, including the FOMC, which is around 21st and 22nd. Now that we've heard from Jerome Powell, anything new between now and then? What's the playbook?
I think the playbook is still coming to that point where are they going to taper? And if they are tapering, what are the variables that will be implemented when it comes to the tapering strategy, really? And I think that would now determine for the last quarter, going into the last quarter for the year, Boston.
Okay, thank you so much. Uchenna Minnis, Global Market Strategist and Managing Partner at Howard Asset Management. Thanks very much. Have a great weekend. We appreciate you coming to our studios tonight to just take a look at the global markets for us. What's the European trading day? Let me see the numbers very quickly because for the US market, we're considering what the impact of Jerome Powell's speech was all about. But this is a European trading day. Just to cover the numbers as you would like. The Euro Stoxx 600 gives you a better reading of what happened within the Euro zone area, 0.43%. London, of course, is over there with 0.32%. That's how it all plays out tonight. Enjoy your weekend. I am Bosin Omofaye here in Lagos. I will thank you for watching. Have a great evening. See you next time.